What's up, YouTube? My name is Ty, financial professional. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is BBBY, Bed Bath & Beyond. This finishes at $18.55 today. That is down 19.63%. And in the aftermarket here, this is currently crashing. Right now, this is at $12.
And it's gone.
So we've been discussing this stock for almost 3 weeks now, ever since it started squeezing. This stock and a bunch of other meme stocks and low float stocks have been squeezing recently, and while most of those stocks have since pulled back, this stock kept going. This went from the low of $4.40 up to the high of $30, which is over a 580% upside. So it's been an epic short squeeze so far, but the past 2 days, this has pulled back very significantly. This is losing momentum, and it does appear like the squeeze is coming to an end here. So I've been saying up to this point that I'm very happy for the ape so far, but it's getting very dangerous, and you guys should probably look to sell pretty soon. Secure the gains, don't get too greedy. Diamond hands is not the way. So there's a reason as to why this stock is tanking so hard. We do have some negative PR here, so let's check that out. So this is breaking news. So a Form 13D was filed, and it says that Ryan Cohen has a 0% stake in the company. So he has officially dumped everything. So yesterday, there was a lot of confusion when the Form 144 was filed, saying that Cohen was going to sell, and everyone was saying he didn't sell yet. I did get a good amount of hate because I was spreading FUD for saying he sold when he didn't sell, but we are getting confirmation now that he did in fact sell. It says here he sold his entire stake on Tuesday and Wednesday. So in total, Ryan Cohen cashed out with more than $58 million in profit. He took a giant dump on the apes. Is he still the captain of the ship now? In addition to that, the CFO, Gustavo Arnold, sold 55,000 shares at $25.52 each. And in addition to that, we did have some price downgrades. Wedbush downgraded to $5 and KeyBank downgraded to $2. And this is in addition to Odeon, which downgraded to 7.5, and B. Riley, which downgraded to $5 not too long ago. So it appears like the institutions are starting to sell and short this down. So that's very unfortunate, but I'm not surprised. Let's be real, guys. We all knew this was going to happen. I've been trying to warn you guys. I've been saying, hit the sell button, secure the gains, don't get too greedy, because ultimately, this was not going to end well. So this was number 1 on StockTwits today. Had over 22,000 mentions, so once again, we're going to analyze it. And during short squeezes, the fundamentals and technicals don't matter as much, but they're still very helpful. So take this with a grain of salt, guys. All right, let's go ahead. Let's jump right in and analyze here. So we do have this bull flag in the making. No confirmation just yet, but here's the flagpole. And all we would need is some pullback to form the flag. And that would be a bullish indicator. That is suggesting that the stock may be due for a breakout. And then we do have a double gap down. First gap down is back at 22.45. So that's a bullish indicator that is telling us that the stock should come back up to 22.45. to fill that gap, and the second gap down will be created tomorrow at 16.20. So that's another bullish indicator that is telling us that the stock should come back up to 16.20 to fill this gap. We do have this cup and handle in the making, bottom of the cup being the low of 440, and there can be multiple possible tops. It can be $30, and if it is $30, that would currently be a bearish indicator, because that would mean the stock is due for some pullback to form the handle. But in the longer term, this is part of an even bigger cup and handle where the top can be $31.70, $39.30, $40, $44.55, or even the high of $53.90. Although I do believe the most realistic tops would be $30 or $31.70. So the cup and handle can be bullish or bearish depending on where the top is, but it looks like in the short term the cup and handle would be bearish, and in the longer term the cup and handle would be bullish. We do have a triple gap up. It's pretty hard to see here, but the first gap up was back at 13.30, so that's a bearish indicator that is telling us that the stock should come back down to 13.30 to fill that gap, and that should fill tomorrow when this opens. Second gap up was back at 8.30, so another bearish indicator that is telling us that the stock should come back down to 8.30 to fill that gap, and the last gap up was back at 6.50. So another bearish indicator that is telling us that the stock should come back down to 6.50 to fill that gap. And all of those gaps should fill in the short term. Here we have an ascending channel. Right now the upper channel is at 26 and the lower channel is around 19. So if this breaks 26 to the upside, that would be bullish, and if this breaks 19 to the downside, that would be bearish. So this did in fact break 19 today, so the ascending channel is currently a bearish indicator. RSI is currently at 70, so this is still in overbought and overvalued territory, so be careful, guys, although it'll definitely be a lot lower tomorrow at the open. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is sitting on the support of 1855, which it finished at today. So if this goes to the upside, next levels of resistance would be 1890, 1930, 1965, 2015, 2055, 2090, 2125, 2160, 2205, 2245, 2280, 2310, 2345, 2370, 24, 2420, 2450, 2530, 2580, 2640, 2670, 2725, 2775, 2810, 2855, 2885, 2920, 29.55, and then $30. There is resistance above $30, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 1835, 1805, 1780, 1750, 1710, 1665, 1620, 1565, 1530, 1490, 1450, 1420, 1380, 1340, 1295, 1260, $12, 1170, 1125, 1090, 1055, 1015, and then 965. There is support below 965, but we're not going to discuss that right now. So right now at the current price, 1855, the channels to the upside and the downside are very wide, so expect significant price action either way this goes. However, if/when this breaks 715 to the downside, the channels start to narrow. So expect a significant decrease in price action if/when this breaks 715 to the downside. This did 159 million in volume today, which is way above the average of 11 million. So the sell-off today was confirmed by the volume. And this is a significant pullback in volume from yesterday of 260 million and the day before of 400 million. So it appears like the momentum is cooling off and the squeeze is coming to an end. Okay guys, just my opinion, not financial advice. So like I said, it's been an epic short squeeze so far. Went up almost 600% from the low to the high. I've been warning you guys up to this point to cash in, secure the gains, because ultimately everybody knew this was going to happen. It was just a matter of when, not if. So it's a falling knife right now, and there still appears to be a lot more downside to go. This looks extremely bearish in the short term. Again, we're getting some very strong bearish indicators right now in the cup and handle, RSI, triple gap up, aftermarket action, and ascending channel. Way more bearish indicators than bullish indicators right now. So therefore, if you want to go long, not financial advice, I would not do that, and I would not recommend that. According to the RSI, 1855 is a terrible entry, overbought, overvalued right now. You would not be buying a dip here. You'd be buying into a falling knife. It's gotten wrecked in the past 2 days, and still a lot more downside to go. So eventually, this should come back up to 2245 to fill the gap there. That could either happen in the short term, if this has a dead cat bounce, or it's going to fill in the longer term when this stock has its day again. So from the current price of 1855, that would be over a 20% upside potential. So there's still a decent amount of upside potential here, but really not too much. And again, this should eventually come back down to 650 to fill the gap there. And from the current price of 1855, that would be about a 65% downside potential. So I would say going long at the current price, 1855 would be a high risk, medium reward play. Not really worth it in my opinion. Again, 1855 is really not a good entry. And honestly, if you're a bit patient here, again, this should eventually come back down to 650 to fill the gap. And I think that would be an excellent entry. A way better entry than the current price of 1855. So from 650 up to 2245, that would be about a 245% upside potential. And it really shouldn't go too much further to the downside. That's near the all-time low. So I would say going long at 650 would be a low risk, very high reward play, and that is definitely worth a shot in my opinion. Massive upside potential in the longer term, and really shouldn't go too much lower to the downside. So you really can't go too wrong there. So I don't like the current entry of 1855. But I can't support going long at 650, and if it pulls back, then you can just average down at the supports on the chart. Now, if you want to go short, not financial advice, you missed a lot of downside already, so that's unfortunate, but there is still a lot of downside to go here. It's not too late. It still looks like a pretty good play to me. Again, this is a falling knife right now. A lot of bearish news. Ryan Cohen dumping his stake. Hedge funds coming in, shorting this down. Momentum cooling off. Way more bearish indicators than bullish indicators. So this is already pulled back pretty significantly, and it looks like it's due for even more significant pullback. Again, in the short term, this has the potential to come back up to 2245 to fill the gap there, which would be over a 20%. And again, this should eventually come back down to 650 to fill the gap there, which would be about a 65% downside potential. So I would say going short at the current price, 1855, would be a medium risk, high reward play. I say medium risk because technically this is still short squeezing, so anything can happen. Although it's pretty unlikely, it looks like the squeeze is pretty much over. And I say high reward play because, again, a 65% downside potential here. So as long as you're able to withstand some upside pressure here, this should eventually pull back down to 650 where the gap is, and that should be some pretty fat tendies to the downside. So I can't support going short at the current price, 1855 and higher. And again, I would cover at 650 where the gap is for a relatively easy 65% downside gain here. So sorry to everyone who lost money in the stock today. Consider taking profits if you're still up. Not financial advice. And good luck to everyone currently in the stock and to everyone looking to take a position. This is BBBY, Bed Bath & Beyond. Thanks everyone for watching today. I appreciate you guys. Please like the video. Please subscribe. And catch me every weekday after market close on the Smarter Gambling Show. You apes already know. Diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.